The entire market has gone for a spin the past few days. The S&P 500 dropped 14 points, causing traders and investors to panic. There was even an echo of a potential market crash, but that was extremely short-lived. Since no direct news correlated with the drop, I decided to buy the dip on some of my favorite stocks, and in just over a day, the S&P has almost fully recovered. However, some stocks had not followed the same recovery. The sudden dip in panic gave long-term investors a real buying opportunity that we haven't seen in months. The two stocks that I'm going to be talking about today are significantly large holdings in Cathie Wood and ARK Invest ETFs, and ARK even decided to buy 800,000 shares of one of these stocks, so make sure you watch the entire video so you don't miss which one they loaded up on. If you do end up enjoying the research I put into making this video, subscribe to the channel because we are on the road to 2,000 subscribers, and just taking a few seconds out of your day to hit that big red button helps me out a lot. Also, make sure you turn on that notification bell to be notified immediately when a video that I make comes out, because most of the videos I create are time sensitive and you don't want to miss out on any discounted stocks in the future. Now, hopefully you guys took this dip opportunity to add more into your favorite stocks. QQQ, which is mainly tech stocks, definitely got crushed the past few days, and a lot of meme stocks absolutely got destroyed too, including SPACs. Now, there's a quote by Warren Buffett that I really like for situations like this, and he says, "Be fearful when others are greedy, and greedy only when others are fearful." Now, if you are a long-term investor, you have to understand that the stock market really does only go up. I know that is a meme, but statistically, if you held an ETF like SPY for over 20 years, you're guaranteed to make profit, so there is some truth behind the meme. And you have to keep that in mind when the markets are trending down, because you know in the end you're going to be profitable if you end up buying good companies and buying at a low price. Lots of people can get really emotional when the markets start to go down and they start losing money and they end up selling their position when usually the market recovers extremely quickly, like we saw just a few days ago, and on a broader scale like we saw in March with the coronavirus and the huge comeback that the markets made throughout the next few months. Now, the two stocks that I'm going to be talking about were severely affected by the recent sell-off and also some earnings reports that came out within the past few days. I'm going to talk to you guys why I'm still bullish on these stocks and why I think they're extremely undervalued at their price. The first company we're going to talk about has done exceptionally well since the COVID drop back in March. Cathie Wood and ARK Invest also have significant exposure in this company, and this company is Square. Cathie Wood explains what Square is and why she's so bullish on the company back in this interview from April of 2020.
And it started with these mom and pop businesses really using the Square point of sale device to put on top of their cell phone to actually do business. And so what can Square see? Unlike a bank, which maybe sees end of month or end of quarter income statements, Square sees every transaction that this merchant has, and can see the cadence, can see when business is good, when it's bad. And what it's starting to do now is say, hey, we see that you're growing your business. We can offer you a working capital loan. And guess what? You can pay that loan off as your business, daily you can pay a bit off, so it becomes a real time. Oh, and we see you probably need more employees. Hey, we can help you with a payroll service. And then they will start infiltrating a consumer base too, which is part of the employee base of this. So it's Cash App gets added strength because it's becoming part of a bigger ecosystem that is proliferating, first through the South, now it's moving up. We're seeing it move, and you'll see on the maps how it is. So the competitive advantage that these companies have relative to banks, I think is going to destroy banks. It's going to turn them into a commoditized utility.
Square took a 20% hit to its stock price when the market made a turn to the downside, and also had an earnings report on Tuesday, which it fell to the low 230s as a result of missed growth expectations. Square beat expectations on Tuesday as they reported earnings per share of 32 cents and a revenue of $3.16 billion. However, the stock price dropped because Square's gross profits were only up 15%, which many believe showed deceleration in the company's growth. Cash App has shown deceleration year to date, as management said there was 164% growth in January and only 130% in February. However, Cash App is still thriving as they just topped 35 million monthly active users. Analyst Sean Horgan said, "We expect shares to move higher driven by continued strength in Cash App customer acquisition and efficient monetization, all of which were on full display in quarter 4. Honestly, I think the sell-off was a bit overkill, and I do understand that Square's earnings weren't perfect, but they're still beating expectations, and Cash App is still growing like wildfire." ARK Invest actually decided to buy the dip in 3 ETFs totaling around 800,000 shares purchase of Square today. That's about $200 million worth of Square purchase in a single day. Recently, in their Big Ideas 2021 reports, ARK talked about digital wallets. Annual active users have exploded on apps like Venmo and Cash App, showing a monumental shift in banking and finances. As you can see from this graph, active annual users from Cash App and Venmo have surpassed JP Morgan, while these apps were created just 10 years ago. The recent boom ARK believes is because of how inexpensive it is for digital wallets to get users compared to banks. ARK believes that each digital wallet user will be valued at around $20,000, and if the growth hits their expectation of 230 million users by 2025, that would make it a $4.6 trillion market. Square also invested $170 million, or 5% of their current cash, into Bitcoin. They recently joined the wave of cryptocurrency following shortly behind Tesla's investment into Bitcoin just a few weeks ago. Square said that they believe in Bitcoin is an instrument for economic empowerment, providing a way for individuals to participate in a global monetary system and secure their own financial future. Although I do have my own concerns about Bitcoin, I can clearly see the new wave of investors falling in love with crypto. Square is setting an example along with Tesla that should echo across all companies, influencing them to buy, which will surely see a rise in Bitcoin's price. ARK Invest is a huge fan of Bitcoin, so this purchase justifies their position even more. ARK Invest still expects Square to grow over the long term, and they are really taking advantage of this dip that we had today, and I'm expecting it to pay off. The next stock we're going to be talking about today is Teladoc Health. Now, Teladoc isn't a meme stock, and some of you probably haven't even heard of it yet. But Teladoc has made a huge move up within the past couple of months, and I've been taking notice. Teladoc Health diagnoses, recommends treatment, and prescribes medication for routine medical issues through phone and video consultations. This company lets you connect with doctors around the world, skip the huge waiting line, and speak to them directly. Since the times we live in require almost everything to be digital, this company will disrupt the healthcare industry in a digital way. This is also why Teladoc is a #1 holding in Cathie Wood in ARK Invest ARKG ETF. They hold over $900 million worth of Teladoc, with 50% more market value than their #2 spot, Pacific Biosciences. The company surprisingly is relatively small with a market cap of $36 billion at the time of this recording. The opportunity for growth within the industry is immeasurable, and along with the conviction that the team at ARK Invest has, makes me want to buy even more. Teladoc just released its earnings on the 24th, and the stock dropped about 7% in after hours after the report came out. Teladoc did miss Wall Street earnings per share estimates, which was a loss of 25 cents per share, and Teladoc reported a loss of 27 cents per share. Teladoc posted revenues of $383.3 million in the fourth quarter, beating the $380.4 million estimates. What's important from this is that Teladoc said they expected revenue in the range of $445 to $455 million, a 20% increase from their current revenues in the next quarter. Teladoc has seen a 25% decrease in price since hitting highs over 300, but I have a feeling this is an overreaction and a great buying opportunity in the healthcare sector. Now, from a technical analysis standpoint, it's actually opening in a really interesting spot right near this 235 support. As you can see from yesterday's sell-off, it bounced right at this 235 level, and it also bounced at this 235 level today. Now, this 235 level is a back test of this previous resistance as support, and so far it's held, and we're going to have to see if it holds tomorrow, and if it does, it should move its way back into the high 200s. Now, let me know in the comments down below what stocks you guys bought during this dip. I'm definitely curious to see what stocks you guys are picking up, and I'll definitely check them out as well. But other than that, that's going to be the end of the video. Of course, if you enjoyed, make sure you leave a like. It takes a few seconds and it helps out my channel a lot. It definitely gets me some more exposure. And if you want to see more, make sure you subscribe because we're on the road to 2,000 subscribers. Other than that, I'll see you guys in the next one.